JD Nasdaq. What do you stand for? JD.com Inc. -ADR. What? All right, monthly candle chart. This is a request, user request. Let's do this. Monthly defined chart. Where's my monthly defined resistance? Where's my monthly defined support? Whoa. Whoa. Did it break down here? Hard to tell. This candle's in progress. Let's start here. Why I'm hesitating is I'm just wondering if it hasn't already broken down. What target would that give? Let's condense, create some black space. All right. We're closer to a breakdown than a breakout. That implied measure move would bring us all the way down to 2350. Like that. All the way here at 2350. Wow. All right. So check it out. Monthly defined support is 3650. So 3651. If we have a monthly candle close, and now how many days we have left? 2 days left. This could be a push. That means it's going to probably close maybe close to that. So we'll have to wait another month. If we have a close, convincing close closer down here, then we'd have this implied measure move target all the way down here. With some possible congestion around here. Previous resistance turns support at the 27 level. So you have a few choices. If you would, if you have a monthly candle close below 3650, and you want to play it using my classic chart trading framework, you cheat on the target, but in your favor, you'd reduce your target to just above the wall, previous resistance turn support, just to make sure you get triggered out here, and you don't want to bounce off this important support and for it to go back up and waste and maybe go back down to that further target. Reduce your reward. Sure, it lowers your risk to reward a little bit, but you lock and load. You enter wherever this candle closes. Put your stop stop on top of the breakdown candle, and you put your profit limit down here. Here's 1% of your NAV. It's your risk, and your reward is from entry to profit limit. So using profit target considerations, you can sleep at peace, and you won't come super close to the price, and don't touch it, like these crazy swing target rules. Man, the precision sometimes it's really eerie, scary. Maybe that's just because we notice at times that it's super laser precise, and we forget all the other times that it didn't reach them or overreached. But this target is the target I would put here all the way down to 27, and not the 2354, which has to go through this support, through even more support here. The zone of the support starts here, and then there's even more support here at the 2547 level. So that's how I would do it right there. All right, 3650, guys. You need to close below that. Let's go head on to Stan Weinstein. Stage analysis. Whoa, look at that. Nice stage 1. That was a beautiful stage 2, but right now, remember Stan Weinstein stage 2s, when you could draw 3 points on a trend line, the 4th point is exit time right here. Half of reposition if you're a trader, and even investors. And after that, investors would exit the same way a trader would right now, because it's close to the end of the stage 2. So either after this pullback here, the sell stop of the traders, you would exit right here. So here's would be your exit, and your entry would have been all the way wherever it broke out there down here. One of these candles. Not bad, right? And honestly, after a 3-point and on the 4th point trendline violation, the price action really slows down. So you don't use trend lines, diagonal trend lines, to play the breakout. You use this area pattern here, or through horizontal. You use the diagonal trend line to know when the momentum's starting to slow down, and you're going to get a sideways move. Either go sideways into a stage 3 and drops to stage 4, or it could go in a sideways move, get close to 30-week moving average into a somewhat start of a stage 3, and then bounce up, and it was just a consolidation. So why take a risk and just hope for the best? You exit, taking your profits, and then you wait for the chart to morph, add some candles, and after that give you the signal to either enter or for a continuation, or wait for a total breakdown. So right now, the way I see it, it broke down, I think, a lot of signs right here. Maybe this candle here. Remember, Stan says on stage 4 breakdowns, you don't always get the volume confirmation. It's just fear is a confirmation of stage 4 breakdowns. I've noticed sometimes the volume does pick up red candles, so I still look for high red candles like this on breakdowns. RSI going downwards from halfway point, and here was straight pipe halfway going downwards. Stan uses the Mansfield indicator. I don't have that. And here was the volume right here. This one here. Just show you here. So we have a horizontal breakdown line, horizontal breakdown line. Here's the pattern. 30 moving average trying to go downwards. Stan didn't use the Ichimoku cloud to define, but he'd say be careful for breakdowns where there's close overhead resistance for breakouts, but for breakdowns close underhand, is that the word? Support. Could bounce off that, resist. And that's exactly what happened here. You need more time. Now it's making a bigger pattern. And now we're right there here on this line. This is the 3650. This is the breakdown line defined on the monthly candle chart, and the weekly is giving some signs going under, creating some noise, some false signals, maybe threading on that line. Guys, this is a definite stage 3 and borderline breakdown. We're really close to a stage 4 continuation breakdown. It started here. Price action is now under the 30-week moving average, pulling down the 30-week moving average. There's not a lot of signs of hope right here, unless next month a bounce off that and continuation of stage 3 until stage 3 finishes by resolving itself to either continuation stage 2 or retry a breakdown. And let's go back to the Ichimoku cloud, and you see that green area. That's Ichimoku cloud defined support. When you're above it, you're in an uptrend, and that's slowing down the price action here. It's representing previous support, and right now we're out of the cloud right here. We're under the cloud. And that coincides, cloud also coincides with that monthly defined resistance, support, sorry. Dyslexia. Guys, it's a definite not buy. You do not want to buy here and hope for the best for it to go up. The trend's starting to go downwards. I'd wait for the close just to see what the market's going to give you in the next 2 days. If you have a convincing close below 36.50, then you could play it with using my classic chart trading framework with that target at 27.15. And if you want to play it at a stand, what you could do is I'd wait also. Either it's going to pull back, I don't know, it's below the cloud. It could pull back on light volume, and then you could pick it up here when it starts going back down, close to maybe that breakdown level. But right now you can't play it at a stand right now. You could have played it here. If you didn't use Ichimoku Cloud, you could have easily entered here using stance framework, and you would have been in the trade here. And here you would have seen this as a sideways move, not even. You'd have to wait. So for stage 4 breakdown, playing it stand right where the stock is right now, I don't see an entry. I'd wait for a pullback on low volume, low green candles going upwards, and then entering when it starts approaching the breakout line, the breakdown line, and going with one green candle. So red candle, red candles, red candles, red candles, maybe some type of hammer. And after that, one green candle after that to confirm that was really the fizzling out of the pullback. So it wasn't a reversal, it was just a pullback. You would be close to the 30-week moving average, bounce off that, and then go down. That's why, guys, I like having green black space here. Use your imagination. Remember these things that happen, because after that, with hindsight 2020, yeah, look, it bounced off the 30-week moving average. Or if it's happening right there, you're not going to notice that. You're going to be noticing other things. You'll be in fear mode because it pulled back so much, and then you think it's a reverse. It's like always when you're in the trade, you think that a pullback, you start panicking, you see, it's reversing, it's never going to go back down my direction, and then you sell close to break even, and then the price action, it was a pullback, goes back down. Now you know what to look for. Pullbacks and contracting in super light volume, it's a pullback. It's going to bounce off the support, the previous support turn resistance, going to bounce off that resistance and go back in your direction. Or has higher probabilities of doing that. That's the practice. So now you know what to expect and what to do when it happens. Okay, JD, we'll come back to you in a few days and see if we get a convincing close below that 36.50, or else I have a whole bunch of alerts set. Set somewhere here, set some there, and see where that moves, how that morphs, get back to it. All right. See ya. All right. Ciao.